All right, we're going to get started in a few minutes here, but hopefully some folks are joining the webinar and will be joining us here today. So good afternoon, everybody. Thanks for joining us here. We have about 25 folks in our room right now. Sorry if I'm clogging the screen with the list of attendees here. My name is Matthew Smith. I'm the Public Relations Manager with Efficiency Vermont. We're going to get started in about 2 or 3 minutes here. Just wanted to welcome everybody and uh, thanks for joining us for this button-up webinar about these home energy tax credits. We'll go over some logistics for our webinar in a moment, but if you have any questions about these tax credits, please do feel free to drop those questions in the chat. We're going to be collecting the questions as we go and try and answer as many of them as we can before the hour is up. Seeing some more attendees trickle in here. We're at about 36, 37. It's going up as I'm reading it. We have about just over 200 folks registered for the webinar today, so we'll wait for the room to grow a bit more before we get going. And just a reminder for folks, if you've registered for the webinar, you're going to end up getting in your email a link to the recording of this presentation and the slides. So relax and take it in, think through some questions you might have for us, and you'll be able to review these materials later. Okay, we'll get started in about a minute here. Thanks again, everybody, for joining us for our Button Up Vermont Weatherization Wednesday webinar. We'll get started in just a minute. Okay, it's 12:03, Jenny, so I'm going to go ahead and get started. We have about 45 folks in the webinar with us. So just to introduce myself again, folks, my name is Matthew Smith. I'm the Public Relations Manager here at Efficiency Vermont. I'm welcoming you to our first ever Button Up Weatherization Wednesday webinar of the year. We're going to be talking about using home energy tax credits before they expire. And to tell you all about those tax credits, we have Jenny Carter from Vermont Law and Graduate School. Jenny, if you could introduce yourself, please.
Well, hi, I'm Jenny Carter, as Matt said. I'm a professor at Vermont Law and Graduate School and a senior attorney in VLGS's Institute for Energy and the Environment and our energy clinic.
And as we mentioned, today's focus is those home energy tax credits. We're going to tell you all about those tax credits, most of which are expiring at the end of the year. We'll also review some rebates from Efficiency Vermont that as well as rebates from your utility and other partners. Those are not expiring. So you'll learn all about those tax credits as well as those rebates. So let's go ahead and begin. Now, before we get started, some logistics. A reminder, everyone who did register for the webinar today will get a recording of this presentation and a copy of the slides. So you don't have to, necessarily track every word or dollar amount we mention here. Just kind of see if you can sit back and engage and think about questions that might be helpful to get answered while you're here with us. You'll be able to review these materials later. And please do go ahead and drop any questions you might have in the chat. We'll try and answer as many as we can today. We may be able to answer some as they come in, but my colleagues from Efficiency Vermont are collecting the questions as we go, so don't worry if you don't see your question answered right away. We do have some dedicated time to Q&A for this webinar. And a disclaimer, this webinar only is providing general information about tax credits. It is not intended to be, nor should it be relied on as legal or financial advice. This is general information about these tax credits. If you want to use any of these tax credits, get in touch with a tax professional who can talk to you about your unique situation and what you are eligible for. Now, with that disclaimer out of the way, I'm going to hand it over to Jenny for an introduction of Vermont law and graduate school.
Well, I'm going to guess that most of you know a little bit about VLGS, although our new name might still be new to you, that we've added the graduate school to our name. I'm a VLS grad, and so I'm really excited to be here. I'm one of the few people, I think, who really enjoys talking about taxes, because I had a really great tax professor here at VLGS when I went here so many years ago. So one of the things you probably know about us is that we're one of the top environmental law schools in the country. We've had that reputation pretty much since we've opened. What you might not know as much about is our energy clinic, which provides a lot of services to the communities. We've worked on a number of various projects, including establishing community solar projects. We've done a fair bit of work to bring high efficiency and solar products to multifamily housing, especially low income housing. Lately, we've been doing a lot of work in terms of getting EV charging stations across the state. And we also just produce, a number of reports and guides that can help people in the community kind of navigate some of these issues. So please feel free. I want to make sure you feel free to contact the Energy Clinic if you want to know anything more about our resources, or if you just have follow-up questions from the seminar. So you can reach out to me directly, and I believe Matt has my email address at the top of the presentation.
Yep, folks will be able to get that email after the presentation and send you plenty of emails, Jenny, so no worries there. So that's a bit about Vermont Law and Graduate School and Jenny's work there. I want to tell you a bit about Efficiency Vermont. So we are a statewide energy efficiency utility. We've been operating in Vermont for 25 years. We deliver energy savings programs to Vermont households as well as businesses statewide. We help Vermonters save energy with outreach and education programs, rebates and incentives, of course, and we support our contractors and our clean energy workforce. And a result of saving energy and reducing the fuel that we use to keep our homes warm, it helps reduce Vermont's greenhouse gas emissions as well. Now, I did mention Efficiency Vermont works statewide, but we do have a few exceptions there. We don't serve the city of Burlington. So if you're a Burlington resident, you should contact Burlington Electric Department. They have many rebates and offers very similar to what Efficiency Vermont offers. Also, if you're a Vermont gas customer, Efficiency Vermont can help you with things that involve electricity in your home, but if it involves heating your home, Vermont Gas would be the best contact for you there. But otherwise, these programs will apply statewide across Vermont. And a bit about Button Up Vermont. It's an annual campaign to help Vermont residents prepare for winter, and we do that by encouraging them to button up their homes. We have Efficiency Vermont sponsors and facilitates the annual campaign, but it's really supported by a bunch of partners working statewide with regional organizations, town energy committees, residents, and communities to help folks think about how their home uses energy, how they can reduce those energy costs, and ways you can improve your home's energy efficiency with weatherization and heating system improvements. So here's what we're going to cover today in our webinar. As I mentioned, we're going to focus on these clean energy, home energy tax credits. But first, we're going to go through some quick reasons on why you should consider buttoning up your home with weatherization. That will help whether you're using these tax credits or not. Then Jenny's going to dive deep into those home energy tax credits with an overview of the tax credit basics, and then get into some more specific information about topics like home energy audits, tax credits for weatherization, heating systems, things like that. We'll have some time for Q&A, as I mentioned. Then we'll come back to me. I'll share some Efficiency Vermont rebates and ways to save, whether you use the tax credits or not. We'll have some time for more Q&A, if possible. And then we'll end with a few slides to give you some clear next steps on what to do next. So before we begin and get into those tax credits, a quick word on weatherization. Why focus on weatherization? Well, in reality, any tax credits that we discuss here today will only work better if your home is weatherized. A home energy audit, for example, is one of the tax credits we'll discuss today. That will likely recommend some kind of weatherization. If you're thinking about tax credits for a new heating system, a weatherized home will make that heating system more effective and more efficient. And that means saving energy and saving money. So you don't have to do weatherization first, but no matter what you do with the tax credits or the rebates that we discuss in this webinar, weatherization is going to be a good idea for almost every home. So we're going to take a moment and understand what weatherization is and why it's something to consider whether you're using these tax credits or these Efficiency Vermont rebates. So what is weatherization? When we say weatherization, we mean insulation and air sealing. Weatherization makes your home more comfortable year-round and more energy efficient. And a more efficient home means less energy is needed to keep it comfortable, which usually translates to lower bills. Efficiency Vermont likes to use the analogy of a sweater and a windbreaker. Insulation is like putting a warm sweater on your home. It keeps it keeps your home warmer when the temperatures drop, but it's really only one part of the solution. Anyone who's been in a Vermont January day and gone outside with just a sweater on knows that a little bit of wind, you can feel that cold air come right through the threads of the sweater. And that's where air sealing comes in. Air sealing is the windbreaker. It covers up the holes in the sweater and it keeps the cold air from getting in, and it also keeps the warm air from getting out. So weatherization really is a combination of the sweater and the windbreaker for your home. It's insulation and air sealing to keep it warmer in the winter. And in the summer, it will also keep your indoor air temperatures more stable. So if you're cooling your home with an air conditioning unit, a heat pump, or fans, it will use less electricity to keep it cooler. So there's benefits there for weatherization as well. I'm going to keep going on, but I do think I might have heard somebody coming on mic. If you could just mute yourself, please. Appreciate that. So real quick, we're going to look at how air moves through a home to see where insulation and air sealing can help. When the temperature inside a building is different from the temperature outside, we call that building pressurized. A pressurized building will naturally leak air wherever there's a hole. All holes in a building will leak air, but the ones at the top and the bottom of the home will leak the most. We all know that warm air rises. So any holes or leaks in your home will be where hot air escapes, things like through the roof, the attic, and the upper stories. Cold air, on the other hand, and drafts, they'll come through those lower areas like cracks in the basement and lower stories. There's a couple common leaks you can probably think of, like vents in your home, bathrooms, kitchens, your dryer, attic hatches or chimneys, windows and doors. Air leaks can really happen in any conditioned area of the home. That's where you spend most of your time living and working and cooking. But usually those rooms are the least cost effective to insulate. We generally suggest starting in the attic where most of the warm air escapes, and then addressing the basement or the crawl space where most of the cooler air comes in. Once you address weatherization and insulation there, then you can focus on other spaces in your home, like adding insulation in the walls, weather stripping on windows and doors, things like that. So before we get to those tax credits, just to sum up why we should button up. Well, it can save money. Saving a buttoned up home, a weatherized home, can save money on fuel costs, historically about 15%. A button-up home is more comfortable. It's warmer in the winter, cooler in the summer, and because it's able to keep a more stable indoor air temperature, it's also going to have some indoor air quality improvements with health benefits. A buttoned-up home also saves energy. Leaky home isn't just wasting money, it's wasting energy. And in Vermont, most homes, about 70%, are heating with some kind of fossil fuel. So buttoning up your home is reducing wasted heating fuel as well. And a buttoned up home is going to reduce emissions, greenhouse gas emissions. The less fuel we burn, the fewer emissions in the environment contributing to climate change. About a third of the emissions in Vermont come from how we heat our buildings and our homes. It's the second largest source of heating, rather of emissions behind transportation, our cars and trucks. So weatherizing is an important piece of the puzzle for Vermont to reduce its emissions and reach our state climate goals. Now, all of those benefits also apply to these tax credits. The technologies they promote will also help your home save money. They'll also make it more comfortable. They'll also use less energy, and they'll also reduce pollution. So it's a good thing to cover these benefits of buttoning up, because those same benefits apply to a lot of these tax credits too. So let's dive into those tax credits. I'm going to hand things over to Jenny Carter.
Well, absolutely. That was where I was going to start with all of the benefits that come out of these tax credits. It's been a fairly effective way to jumpstart a number of sort of energy saving measures that these credits cover. And but unfortunately, they're not going to last very long. So let's start with an overview of what the available tax credits are. All of the tax credits that we're going to be talking about today are 30% tax credits, but some of them do have dollar caps on them. And since this is a weatherization seminar primarily, we're going to primarily be focusing on this 25C credit. And I'd like to just point out, you might see, notice the numbers on the side of the page, 25C, 25D, 30C. You might be asking, what do those relate to? And those are the numbers in the Internal Revenue Code that relate to these particular credits. So these credits were passed by Congress under the Inflation Reduction Act. Most of these credits were set to expire in 2032. But unfortunately, under the recent new BBB that was passed in July, the deadlines for those credits have been moved up to the end of this year. All of them except for the alternative fuel vehicle refueling credit, which we know is the EV charging credit, that won't expire until June 30th of next year. The new vehicle and used vehicle credits, however, expired yesterday. So I'm sad to say that the time to take advantage of those has passed. But this is an overview of the ones that we're going to be talking about today. So next slide. This is just reiterating that, deadlines coming up. There's only 3 months left to take advantage of these credits. But I will say 3 months, there still is an opportunity to take advantage of them, some more than others. And we'll be talking, some are going to be easier to take advantage than others are. But I think the main ones, it's still a possibility. Next slide, please. So before we get into each of the tax credits, I thought we might want to talk a little bit about just what tax credits are and some tax credit bases so that we're all kind of starting from the same place. And here's some sort of general information that applies to tax credits generally. So first off, tax credits offset your tax bill dollar for dollar. And by that, I mean, you are not going to have to itemize to take the tax credit. So, but there is a caveat to that. Tax credits typically only offset the taxes you owe. That type of tax credit is referred to as a non-refundable tax credit. And that's what most tax credits are, at least under the federal system. There are a handful of what we call refundable tax credits, and that means you get to take it whether you owe taxes or not. But all of the ones we're going to be talking about today are these non-refundable tax credits. So to get a tax credit at all, you have to owe taxes. To get the full credit, you have to owe at least as much in taxes as the credit amount you're seeking to recover. So for example, if you owe $100 in taxes, but you are qualified for $200 in tax rebates from these, you will only get $100 in a tax credit. You only get the amount up to what you owe in taxes for that year. Another thing to know about tax credits is you don't get it until you file your tax return. So this isn't going to be like that nice refund you get from Efficiency Vermont or from your utility, that they're pretty good about cutting the checks right after you submit your application or within a reasonable amount of time. IRS will get it to you after you submit your application, but as you know, you can't submit your taxes until next year. A question I get often though is, what if I've had taxes withheld so that I don't owe any taxes? So if you've already paid all your taxes through the year through withholding, don't worry, you can still get the credit as a tax refund. Next slide, please. I think one more thing I want to say before we move on in terms of a tax credit is I want to distinguish it from a tax deduction. A tax deduction, first of all, you can only, most tax deductions, not all, but most tax deductions you only get if you don't itemize. So I'll reiterate, with these tax credits, it doesn't matter whether you itemize or not. You take your credit after you have finished filling out all of your tax forms. So it's after you've already kind of figured out what your gross tax liability is. At the end, it will allow you then to deduct the credit on your tax forms. It's also different from a tax deduction, because a deduction is calculated as a percentage of your project cost based on your marginal income tax bracket. So by that, you all have probably heard, you've got the 12% income tax bracket, the 22%. I think the next one is 33%. The amount of a deduction depends on what your marginal tax bracket is. The tax credits, it does not matter what your tax bracket is. It only matters whether or not you have enough tax liability to take advantage of the entire credit. Tax credit is a fixed percentage of the project regardless of your tax credit. So for these tax credits, it's 30% of your tax liability. I'm sorry, the cost of your project. Some tips I've got for you. Please don't chase after the tax incentives, because I know they're expiring in 3 months. And I wish I could tell you you had a lot longer to take advantage of them, but I think it's important not to chase after these incentives at the expense of doing, getting quality work and appropriate equipment for your situation. You're going to need to make sure that the products you install meet IRS specifications, because there are some nuances to these tax credits. And we'll be talking about those somewhat, not in total detail, but we will be talking about those in our subsequent slides. Another tip I have for you is look for contractors who are familiar with the credits and can help you make sure that you've got all the documentation that you need for your credits. Some of the projects you can do on your own, and I'll give you some advice that if you're doing those on your own, how to make sure that you are getting the right products. So next slide, please. Another tip that it just feeds right into that is bookkeeping is always an important aspect of kind of any, kind of taking any tax deduction or credit. But you're going to want to save all your receipts and invoices, and you're going to want to ensure that they document the specific products you've installed in case you're audited. In the past, some of these credits you were able to carry over into future tax years. That is no longer the case for any of the credits because this is the last year that they will be available. If you do, however, we'll talk a little about it. If you had a solar project or battery project, and you rolled over a tax credit into this year, that one will be acceptable, but you will not be able to roll it over next year. The efficiency credits weren't ever allowed to be rolled over. So once again, we're going to say this a few times. I don't think you always need to contact your tax advisor. We kind of, sort of need to say that. Like a lot of you are here on this call. I think maybe in part you want to do taxes yourselves. I'll give you some general advice on how you might go about doing that. But when you've got any real specific questions, that is when you're going to want to talk to a tax professional. Next slide, please. So the term of art with all of these tax credits is you take the tax credit the year you placed it in service. So it isn't necessarily the year that you bought the materials. It's the year you placed it in service. I do get asked the question, what if you placed in service some projects or materials before this year and you didn't claim them? I've got good news for you. You still have a chance to claim them. Generally speaking, the IRS allows taxpayers to claim a refund, but it has to be filed. You have to file an amended return. That's something you may want to have a tax advisor help you with. You can file an amended return within 3 years after the date of the original return was filed, or 2 years after the date the tax was paid, whichever is later. So if you bought some insulation or you bought a Energy Star door or windows in the past 3 years, you might want to think about filing an amended return if you did not claim them already. But you will have to amend it for the year that you did place it in service. So next slide, please.
There we go.
So here we go. If you're filing yourself, I'm not going to tell you how you're going to file all of your taxes, but here's what you're going to need to file for these clean energy credits. It's nice for the homeowner credits. They're all on one form. Oh, if you can go back.
Sorry about that, Jenny.
They're all on one form except for the EV charging credits. So it makes it easy. And I will say, at least to me, I think the form and the instructions are laid out pretty well. And even if you aren't going to do your own taxes, the IRS instructions for this form are really useful in terms of just explaining exactly what qualifies for each credit. And believe it or not, they lay it out pretty simply. Next slide, please. There's a lot on this slide. And I think at this point, I'm going to apologize that these PowerPoints, a lot of them are really text heavy. And the reason I've done that is because I want you all to have sort of a reference document that you can take home. And I want to make sure that it kind of at least covers the outline of what's covered and what you need to do. So let's get started with 25C because that is the home energy efficiency improvements credit. I've got it all listed here. As you can see that the 25C tax credit covers audits, exterior doors and windows, insulation and air sealing, electric panel and circuit upgrades, but we'll talk about those. Those only apply. You can only get that in conjunction with doing doing one of the other things that 25C covers, or that the solar and battery credits cover, which is 25D. It covers heat pumps, heating and cooling systems, electric heat pump heating and cooling system. It also covers biomass, wood pellet stoves and boilers. We're not going to be talking about those because those aren't what we're really trying to promote, and heat pump water heaters. So once again, and they break, the IRS breaks these down into several different categories within the 25C tax credit, and I'll show you some of those categories in subsequent slides. But all the tax credits cover up to 30% of a project's cost, subject to dollar limits for specific improvements. So I'll be telling you about what those dollar limits are. The maximum total 25C credit is $1,200 plus $2,000 for heat pumps, heat pump water heaters, biomass stoves, and boilers. That's the general rule with respect to 25C, is that 1,200 plus 2,000. But they also break it down some further with respect to some of the specific products that you might be buying. Tax credits are only eligible for taxpayers' principal residence, and in limited circumstances, it's available to renters. And in limited circumstances, I don't have that down here, but in limited circumstances, it's also available for second homes. It is, however, only available for existing homes, not new homes, so not new construction. It can also apply to a renovation, or if you're adding on an ADU, that can qualify, but just not a whole new house. So our first dive is going to be into energy audits. Those are 30% credit with a $150 cap. So that $150 can go into that total of $1,200 figure that we talked about in the last slide. One of the requirements for the energy audits is they have to be performed by a certified home energy auditor and include a written report. On the IRS's website, they give a little bit more information about how to find a qualified energy auditor, and I have actually put a link at the bottom of this slide that gives a listing of the programs, and from there you should be able to get a list of auditors. If not, I'm sure Efficiency Vermont can help you with that here in Vermont. Next slide, please.
Yeah.
So another component of 25C is what they call the qualified energy efficiency improvements. And that covers the building envelope components, insulation, windows, and exterior doors. So I've listed it out here, broken it down, kind of what the caps are and what the kind of basic requirement is to meet each one of those. So for windows and skylights, 30%, as we always say, up to $500 or $600, and products must meet Energy Star most efficient criteria. That should be on the products, on the label for the products. You're going to want to make sure if your invoice doesn't show it as Energy Star, that you keep maybe a photograph of the Energy Star label on the product that you bought. Exterior doors are 30% of cost, once again, up to $500, and you're allowed only, so to get up to $500, you're going to have at least 2 doors. You're allowed $250 per door. Those must be Energy Star certified. Insulation and air sealing, 30% of costs. That you can do up to the whole $1,200. And, that's something that, many times is eligible for, like a lot of homeowners do that themselves. But you can also clearly hire a professional to do any of this work. but I will caution you that the credit for these particular items is for the product only, and it does not cover the installation. There are other credits we'll talk about that do cover installation. Next slide. Electric heat pumps and other heating systems. So this is really kind of for the HVAC systems. I think here we've also trying to talk about kind of what's realistic. Personally, like, so when I got my heat pump in, I was able to get, I probably from the first time I contacted a couple of contractors to get estimates to the time they were installed, I think took maybe 4 weeks. I can't tell you, how busy they are right now if, they've got a rush on because of the tax credits. But this is something I think if you've been thinking about doing, now is a really good time to do it. Especially because you can couple this if you need any panel upgrades. You can couple your heat pump tax credit along with your panel upgrade credits. So 30% of the tax credit with the $2,000 cap. Plus it would, your panels would be in addition to that $2,000. Although those come within the the other $1,200 limit. Requirements are that heat pumps must meet Energy Star most efficient standard or their cold climate standard. Wood biomass stoves, boilers have to meet different standards. You're going to be on your own finding the requirements for those. But that shouldn't be too hard if that's what you want to do. Nice thing about the HVAC credits is it does include installation costs. So you can just make sure when you get that invoice from your installer that it documents that you have the right Energy Star certification for your products. Next slide. Heat pump water systems. These fall in the same broad category that we were just talking about. So you can get 30% tax credit up to $2,000 cap. And it includes the installation costs. I just want to be clear, though, that there's one $2,000 cap that applies to one, essentially. Well, I suppose you could have multiple. In theory, you could have multiple systems, but for any one of those, even if you're adding them together, it's $2,000 total. Next slide. Electric panels. 30% tax credit, up to a $600 cap, covers panel boards, sub-panel boards, branch circuits, and feeders. Has to be installed per the National Electric Code. And you have to install, you get this credit only if you're installing it with 25C improvements or 25D property, which, as I had mentioned, is the solar and batteries. And it must have a load capacity of at least 200 amps. And while this needs to be installed with your 25C or 25D improvements, you might also find if you're taking advantage of the EV charging tax credit, it can help you there as well, so long as you are doing one of these other installations, a 25C or a 25D installation. Those electric panels may also help you if you need an upgrade for your EV charger. Next slide. So 25D, these are for like solar panels for electricity or hot water. It is for battery storage. It's for small wind turbines and geothermal heat pumps. So once again, 30% of costs. The nice thing about this tax credit is there is no cap. It covers parts, labor, and most other necessary costs. So for example, if you're installing solar panels, if you've got an interconnection cost, it will cover that. I think the most realistic one that you can, get installed in the next 3 months is going to be batteries, if you choose to be buying your own. Of course, it won't cover the battery lease programs that utilities are offering, but if you do, it can be included if you buy them. Some utilities I know have bring your own battery programs, and GMP is one of those, and I think BED is as well. I'm not sure which other utilities offer that. Which isn't to say it's, out of the question to still get solar panels. But you're under the gun. If you really, really think you want to get solar panels, I would start working today on finding your contractor and seeing who is still available to come out and give you an estimate and who says they can get them installed this year. Because remember, there is a December 31st, 2025 deadline that they actually have to be placed in service. So in terms of solar panels, that means and batteries, any of those, they have to be connected. You have to have your interconnection agreement and your permit in hand and be connected to your utility in order to qualify for having placed them in service by December 31st. I think this is our last one for today. We're going to talk about is the alternative fuel vehicle refueling credit. I don't know why I find that to be a tongue twister, but I do. I just call them it's the EV charging credit. For purposes of our webinar, it's a home EV charging credit, but this is one credit that applies to everybody. Anybody can take this: businesses, residences, nonprofits. Because for nonprofits, there's something called elective pay that they can take advantage of that allows them to take the credit without even owing taxes. But for homeowners like you and me, we still are going to be subject to that having to have tax liability to take advantage of it. But so it's a 30% credit up to $1,000. That can buy you a pretty nice level 2 charger if your utility doesn't provide them, or even if your utility does buy them. If if they're willing to give you a credit and you want a nicer charger, you can do that. You can't double dip with the IRS, so you're going to have to subtract that utility credit before you calculate your 30%. But that's still you can get a pretty sweet deal with that. And it covers equipment and installation. It doesn't cover things, though. I'll caution you, so for solar panels or for, EV chargers or any heat pumps, any of them, the IRS is not going to let you include the cost of, say, an extended warranty. Anything that's optional is not going to be covered under these credits. Next slide. So, IRS resources. I have just put here the different, the IRS forms. So you can find you can find the form, you can find the instructions for the form, the 5695 form. And I've also put a couple of links to what are essentially fact sheets, although they don't call them that, on the energy efficient home improvement credit fact sheet and the residential clean energy fact sheet. And I
think that's it, Jenny. I think we're ready for some tax credit questions.
Yeah.
So a first question, something that's come up in the chat. Sometimes agencies in Vermont, they might offer like a free virtual home energy visit, for example, from Efficiency Vermont, or some kind of free home audit. if folks are getting some of those services for free, would they be eligible for the home energy audit tax credit, or would they have to outlay some kind of money to be eligible for that tax credit?
Um, yes, and I think I'm missing a slide here because I must have accidentally deleted it. And I will find it and put it back in so at least you have it when you want to download the presentation. So the answer to that question is, especially with the home energy credit, you, for the most part, there are limited exceptions, but I'm going to tell you the general rule is that you're going to have to deduct any kind of rebates or other credits you've gotten, state, local, federal, municipal, or utility credits. You're going to have to deduct that from the cost of whatever the product is or the product and installation is. You're going to have to deduct it from those costs before you calculate that 30% credit.
Okay, thank you for clarifying that. I'm going to move into some other questions that are coming up in the chat. We're going to try and address them in some kind of order, but if you don't hear your question answered and you just ask, give us a minute, we'll try and get there. William asks a credit about tax credit eligibility. William asks, does the tax credit owed include RMD? RMD stands for Required Minimum Distribution.
I would have to know a little bit more. Is that a question relating to solar panels? I'm not quite sure what he's referring to.
Yeah, William, if you have some details you can share with us, please go ahead and send those in the chat. My colleagues will try and get that update and we'll see if we can come back to that question. I'm just going to move on to our next question here. Patrick asked a question about the process for tax credits. Patrick asks, if I install these elements as a homeowner, I assume, for example, say a heat pump or something like that, do I need a professional to test them to verify to claim the credit?
No, is the very short answer. Other than there may be if you're hooking up solar panels, you are I believe you're going to need to have an electrician do that just to be complying with Vermont safety laws. But there's nobody who's going to test whether or not your system's working properly for purposes of the tax credit. Now, you do have to be to qualify for the solar and battery credits to be placed in service. There is going to be the check kind of there is, are you connected to the utility? Is that working? So if that isn't, that might be a gray area if you're connected and you're supposed to be working and it's not. I think, we've actually run into that at the here in the energy clinic. What constitutes it having been placed in service? How long does it have to be placed in service for? Is 10 minutes good enough? But it does have to be working for some period of time to claim the credit.
We have two questions coming in about EV chargers. One question asks, if you have an existing EV charger, but you needed to move it, would those costs be covered by the tax credit? The other question asks, how does the EV charger credit work if you get a free EV charger, say, from your utility in Vermont?
So if you get a free one, you are not going to be able to claim that. Interesting question about, I do believe, and this is where I say, you'll need to double check on this. I do believe the installation costs, if you had to, an electric panel isn't going to be covered under the 25C credit because it doesn't apply to the 30C credit, which is the EV charger credit. So, but you still might be able to get installation costs. You may not be able to get the panel upgrade, but I think you still could get the installation costs, but I would want you to double check that.
Yeah, that sounds like one of those questions where it's a very specific situation, best to
And
check with the.
simply moving it, I think the IRS would not allow that.
Okay. Kimberly asked
But
this question.
if you did buy it, if you did buy your EV charger, 2 years ago or within that window, 3-year window, you could amend your tax return to get uh, the credit for that, as well as the installation. If your initial installation was within that window too, you'd also get a tax credit for that installation.
Thanks, Jenny. This question from Kimberly is probably relevant to a lot of folks who might also be thinking about Efficiency Vermont rebates in addition to the federal tax credits. Kimberly asks, how do the Efficiency Vermont rebates apply to federal tax credits? Do the rebates reduce the total cost of a project? So for example, would you be getting a tax credit on 30% of the reduced cost after the rebate? That's Kimberly's question.
You got it, Kimberly. The general rule is um, all government issued incentives and public utility incentives need to be reduced from the cost of the property. And I would venture to say, although somebody's willing to, if you want to go out on a tax limb, my reading of it is Efficiency Vermont, because it is the state's efficiency utility. There's not a loophole, or at least a strongly argued loophole for not deducting those refunds.
Got it. Thanks, Jenny. I'm going to go back to that question William asked about if the taxes owed include RMD. RMD, money required, required minimum distribution. So William added, RMD is money required to give to the IRS for pre-tax money saved. He goes on to ask, if we install something such as a heat pump water heater, would that reduce the required money owed? I have solar panels and an EV charger installed already.
So I'll say I'm not familiar with that term. If what you're asking is that you are required to put in minimum tax payments, such that you've already sort of prepaid your taxes, you do still get to apply the credit. The credit doesn't apply to, it doesn't, the way you calculate it is based on what your tax liability was for the year, regardless of whether or not you prepaid any of that. It's on how many dollars are you going to be owing the IRS for that whole year? Whether you prepaid them or you're going to pay them afterwards, you still get to take the amount that essentially you're putting on the bottom of your tax form. You get a credit against that. So you can get a refund. If you've prepaid your taxes, you can get money back. I hope that answers your question. And if not, William, feel free to, shoot me an email and we can discuss it further.
Running up on time here, Jenny, so just a few more questions. Sharp question from Matt in the chat. I've been told solar and geothermal tax credits are available to new construction and for second homes. So I believe that's only to new construction and for second homes. Can you clarify or confirm that nuance? Again, that's the solar and geothermal tax credits.
They are available for solar and geothermal. It doesn't have to be new construction. It can be existing homes or new construction. But this tax credit, the 25D tax credit, does not apply to commercial buildings. So it doesn't apply like to a multifamily, and by that I mean it's a homeowner credit. It's not a commercial building credit. They have their own credits. That's the 48I investment tax credit and the 48E investment tax credit.
Okay. Time for a few more here. We're going to now pull from some of the questions that came in through email before the webinar started. Let's see, Lynn asked a question about home improvements, what qualifies in the process or paperwork required to get the tax credits.
So to get the tax credits, you have to file your taxes first off. So your general taxes, you can't just file the energy tax credit form. So you're gonna have to file your tax form. You're also gonna have to, as I said, you're gonna have to file the 5695 form. And that covers all the 25C and 25D credits. There's a separate space, I think, on the 1040. I would have to check that uh, for the EV charging credit. But you would need to do your regular taxes, and then you would need to fill out that form as well. And from what I have heard, I can't personally attest to it. I hear that most of the major online tax software services do walk you through the process of claiming these credits.
Okay. We are going to have to leave the Q&A there, folks. We have a few more slides to get through, quite a few, in fact, but I'm going to run through the Efficiency Vermont rebate slides really quickly to just give you a sense of what's available from Efficiency Vermont, in addition to some of the tax credit savings you can get. These slides, like I said, you'll get a copy of these slides to review at your leisure, so you can really dig into what the rebates that are available from Efficiency Vermont, our utility partners, and other partners in the state. So I'm going to run through these really quickly. We talked about a tax credit for a home energy audit. If you're able to use that tax credit, fantastic. If not, you can get a free virtual home energy visit from Efficiency Vermont, really get a sense of how your home is using energy, a lot of great detailed insight into your home. If you're thinking about the windows and doors tax credit, we have a $100 do-it-yourself rebate, do-it-yourself weatherization rebate that can be used with the purchases you make for those tax credit eligible windows and doors. Please note this rebate is limited to one DIY $100 rebate per residence per calendar year. If you're income eligible, you may be able to get some comprehensive free weatherization from the state's community action agencies. They run our weatherization assistance programs. This is not an Efficiency Vermont program, but it is free weatherization to income eligible homes in Vermont. So take a look at this map and find the county or town where you're located and get in touch with these weatherization assistance programs to see if you might qualify for that free weatherization. Efficiency Vermont has a really robust weatherization rebate. It's called our Home Performance with Energy Star rebate. It offers up to $9,500 for a comprehensive weatherization project in your home. It will address things like improving comfort, reducing energy bills, and making your home more efficient. It will also address things like moisture and indoor air quality. So it's a really comprehensive approach to weatherization for your home. We have some heat pump rebates that we can talk about, from $500 to up to $2,200. There's also additional rebates from your electric utility. If you're interested in heat pumps, those would be worth pursuing. You can find the details and any additional rebates for income or from your utility all on the Efficiency Vermont website. We also have some great rebates for wood heating systems. Again, you can find details on wood stoves or pellet or wood boilers or furnaces on the Efficiency Vermont website, and some details in these slides, which you can review. Finally, heat pump water heaters. These are all electric water heating systems, much more efficient than traditional electric or fossil fuel water heating systems. You can see the rebates from Efficiency Vermont on the screen, and there are also additional rebates available from some utilities in Vermont. Some other resources, we have a tax credit blog that has all of the tax credit information that we discussed here today and relevant rebates from Efficiency Vermont all in one place. If you need a contractor, you can find a pro using that tool on our website. And you can also learn about financing your project and how you can get some low interest or zero interest loans to help pay for that project over time. Again, a lot of resources on Efficiency Vermont's website, so please take a look. We don't have time for a second round of Q&A real quick. So Jenny, I'm going to ask you to leave folks with next steps for these tax credits.
Either start doing your research for your do-it-yourself project or talk to a contractor as soon as possible to schedule work. I always throw in consult a tax professional about your project, but I will say that I trust some of you are, pretty capable of who filed your own tax returns before. You may find that this is something you can do yourself, and particularly if you use tax preparer software. But just remember that the deadline is everything has to be put in service by December 31st, 2025, except for the charging credit. And you can always reach out to me. I'm not going to be able to give you specific tax advice, but I'm always happy to help with, giving you any more general advice.
Thank you, Jenny. Some next steps from Efficiency Vermont. We've talked about reaching out to Efficiency Vermont already in this webinar. There's our phone number. You can get information about rebates and programs, whether you use these tax credits or not, and also learn about rebates from Efficiency Vermont, also potentially from your utility and other programs you might be eligible for. And a reminder, these rebates are not expiring, unlike those tax credits. We talked about a virtual home energy visit. You can sign up for a free virtual home energy visit to understand how your home is using energy. And if you're a Vermont Gas customer, you can also reach out to them and ask for a free home energy evaluation to understand energy in your household. And finally, if any of the topics we discussed here you'd like to go in more depth about, we have several webinars throughout the month of October, all of them at noon. And a reminder, if you register for these webinars, you can get a recording of the webinar and the slides. You don't have to be there live at noon to learn. So there's our schedule for the month of October. So thanks for joining our webinar today. Please consider taking our button-up survey. Yeah, Jenny.
Can I just add one thing? If anyone's going to be at the VCAN conference, the Vermont Energy Action Network conference, I believe it's November 1st at Lake Maury, I will be there. So please come talk to me. I'd love to meet you and answer any questions that you have.
That's great to know, Jenny. Lake Maury is a great lake, so hope it's a good one. There's that QR code, folks, if you have a moment to take a survey about our webinar today. And thank you for joining us. Appreciate the time, appreciate the question. And Jenny, thank you very much for your time and sharing this important tax advice with folks.
Oh, thank you, Matt. I can't tell you how much I appreciate Efficiency Vermont and, what a contribution you guys have made to moving us towards a greener future.
Appreciate that, Jenny. Thanks again, everybody. We're going to go ahead and end this webinar now.
Take care.
So long.